The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and we don't have tax season to talk about anymore because we are getting ready for 2025. And so we're gonna make sure that you're ready for next year. And if you're having any trouble, any bumps on the road from 2024, we're here to help you. And, of course, 8030930. 8030930, star 930 on a cell phone. You can text us at 716-8030930. I got my buddies here in studio with me, Christopher Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher. And Tiffany Fabian.
Hey, happy Saturday.
How was that game last night?
We had such a good time. It was a little bit of a nail biter. It was a close game. We won by 1 point, but always a great atmosphere. And
but it's a W.
It's a W, yeah. And the announcer, his name is Chris. He's my client, and so when I hear him say, the box, or what do you got? Nothing. I just think
go
about
Bandits.
I just think about him and the great team that we have here in Buffalo.
And we have our Buffalo decorated up like a Bandits fan right now.
We
right?
do.
Outside the office. Well, since tax season ended a week ago on Tuesday, we've done a lot of tax returns that were people that just couldn't get in.
We sure have. We've been really, really busy. The staff is working away and doing night appointments and day appointments. And
so it's like
busy.
Never too late. The statute of limitations is 3 years from the due date of the return. And at that point in time, you would lose your refund. But for anybody that hasn't filed, it's never too late. We can do tax returns from 2009 going forward, right?
Yep, most definitely. I am doing on Monday an amended return for 16 because the year was still open because there was...
They hadn't paid their liability?
Yep, so the year is still open. So we do all types of years, and we're mostly right now doing 2024.
Here's the thing that I wanted to talk about, and it's such a mystery. When my clients owe money, they go, I don't know how to fix my W-4 at work. So can we talk about the W-4 and what it is and who has to fill it out and what's the nature of it and how complicated can it be or how simple can it be?
Yeah, I think that's a really good idea because when the first Trump tax changes came around in about 10 years ago now, going on 10 years ago, is when the W-4 changed, and then it became even more confusing.
The truth is, it's got like 4 sections. The first section is like who you are. The second section is do you have any dependents that you want to claim and other credits. And then the second, multiple jobs, then credits, and then anything optional. And the thing is, the more you put on this W-4, the less they're going to take out.
Yeah, and I can't tell you how many people still do. I'm doing single 0. I'm doing single 1. It doesn't work like that anymore. No, right, Chris?
Right. They want you to get your money all year. They don't want a big refund checks. Single 0.
But that doesn't always work, though, does it? I mean, because what happens if there are, let's say, mom and dad and one child, and so mom fills this out with one child, and he fills it out with one child, which means that they're going to give him credit for a $2,000 credit, and they're going to give her credit for a $2,000 credit because nobody knows what the other spouse did, and they're going to withhold and owe money.
That's right. That's right. And it's especially hard when one of the spouses has 2 or 3 jobs. That even confuses things more.
Right. So the whole thing is, if you are let's say this year you ended up with a balance due, and you think, I don't really like this at all, then you can leave your W-4 the same and just go down to step 4, which says extra withholding.
Mm-hmm.
And so if you're short $1,200, that means your extra withholding should be $100 a month. and that would be easy, and then you don't have to fill out another W-4. But I'm going to tell you something. If you don't change your W-4, they're going to continue to do what they're doing because that's what you told them to do, and we will help you. So if you have trouble with a W-4, you can call EG Tax. We'll help you fill it out.
Also, when you do change it, check your pay stub.
Oh, good point, Chris. Because how many times do people say, I told Martha to change it? But Martha never changed it because they didn't change your withholding, right?
Right. And the days of paper pay stubs are far
Gone.
behind us. So you got to pull it up on your phone and take a look and say, oh, wow, they didn't change it. Let me talk to Martha and see
Right.
why didn't you do it?
Right. And so if you asked the payroll department to withhold more taxes and your paycheck stayed the same, that means they didn't change the withholding. And you can't very well get mad at the payroll department next tax season because you're the one that got the pay stub and it was the same as before, so no change. So the important thing is just exactly like Chris was saying, if you need to change your withholding, make sure that there's a change in your take-home pay. It should, if you wanted more taxes to go to the federal government, your take-home pay should go down.
Right. And that's for people who work. What about retirees?
That's good. Why don't you talk about retirement?
A retired, they have the W-4P for the pension or IRAs, or they have the W-4V for voluntary withholding from your Social Security. So even though you're not working, you still can change your withholdings, and you just got to fill out the right form, turn it into whomever, and I've helped people go right on their phones and do it right online, and make sure you hit submit.
Because it's really not hard. But the worst thing is, that old adage, if you continue to do what you're doing, you're going to continue to get what you got.
Exactly.
Correct.
So you got to change. And, kind of going hand in hand with that. Again, 8030930, 8030930, star 930 on a cell phone. And our text line works this week, 716-8030930. Going hand in hand with that is people that should do estimated tax payments. Now, what does that mean?
Yeah, that means paying every 3 months or quarterly. So this goes for a lot of people who are self-employed. For instance, I was doing an esthetician the other day, and she's self-employed, and she's going to make about $40,000-$50,000 next year. And so she wanted to know how it could be so she's not holding the bag at the end of the year. And I said, we can calculate what your liability will be, and you can mail it in every 3 months to the IRS. And so that way you can avoid the big crush at the end of the year.
There's two things you avoid, the big crush, and the other thing is they penalize you.
They do.
If you don't prepay, this is like people go, what are you saying? I mean, when you earn money, you have to pay it in advance.
Yep,
of filing your tax return.
The IRS likes their money in equal periodic payments throughout the year.
Right, in advance.
Yeah.
And so if you're going to owe money, either you change your W-4 at work, or you pay estimates, or you do a combination of both if you don't want the penalty.
Yeah.
And a lot of people aren't even aware that they're being charged a penalty.
Right.
Because now software just computes the penalty as part of the tax return.
Yeah. I know. I had someone the other day, new client, come in, and they're like, "Why? I have a penalty? I've never hit with the penalty before." And I looked at their last couple of years. I said, "Yes, you have." And they're like,
But nobody,
"What?"
I mean,
But
you
no
don't
one
say to
told
somebody,
them.
boy, they're going to suck you in the jaw this year. But that's part of the way that you say, well, look here's a penalty we don't want you to get. And so we're going to set you up on estimated taxes, or let's change your W-4 at work. And that's why we want to talk about this now, because let's face it, April is almost in the memory books here. So we only have May, June, July, August, September, October, November, and December to make up for what they haven't withheld thus far.
That's right.
Right?
Yep.
Okay, let's go to Renee. Hey, Renee, how can we help you?
Hi. I hope you can help me with this question. I am a lab owner, dental lab owner, and I have a merchant account where my clients can pay me by credit card. So in paying me by credit card, there is a transaction fee, and I'm wondering if I pass that fee on to my client, do I collect sales tax on that fee?
Chris, Tiff?
Well, that you're doing a professional service, so there would be
Right.
no sales tax, but you would have to count that
Income.
as
As
income.
You would
I
take
get-
it would be
right.
income, it would be your gross income, and then it would become an expense as well.
I see, income and expense.
Right.
All right, that's great. Thank you so much.
All right, thanks a lot for
Good
calling.
question.
I'm Esther Gullius, the tax lady from EG Tax. We're going to take a short break. 8030930, 8030930, star 930, and on a cell phone, and you can text us now, 716-8030930. See you on the other side. Hey, you know, we had a great tax season, and I want to thank all of you people that listened to us and used our service. We're so thankful. And for anybody else that said, I'm just going to stick with TurboTax, if you want a second, we are happy to do a second look. You'd be surprised what you don't know that you did wrong. So we're happy to help. And our corporate headquarters, we take all 32 of our offices and kind of shrink them down into one office at our corporate office at 1890 Colvin Boulevard in Tonawanda. And we do 25, 30 tax returns, 40 tax returns a day, every day. And so don't feel bad if you're coming in late, because everybody else is too. And
You're
it's
not
okay.
alone.
Right? You are not alone. Right? Okay, let's go to Bob. Hey, Bob, how can we help you, sir?
I have a question about, I heard you mentioning the taxes are due as you make the money, and I've been doing that for 40 years.
Good for
paying
you.
the estimate quarterly taxes. Yeah, most of the time I come out pretty close. This year, we are selling my mother's house. Here's the situation. She's in a life estate, so they are prorating her as you would for life insurance, and they're giving her like based on the actuarial tables. They're giving her a percentage
Right.
that'll negate the life estate. So me and my sister are going to get approximately 85% of the sale of the house.
Is mom with us still?
Oh, she's still with us. That's why she's getting the 15 or 18% or whatever it is. She's
So
in a
you-
nursing home.
Okay, so when you do a life estate, the benefit would be upon the passing of the person who gave the life estate. That would give a stepped-up basis to the heirs who are inheriting the property. In your situation, you're on the deed as a gift. So you have to go back to all the way to mom's and dad's original basis plus improvements, and if dad passed away in the last few years, you'd get a 50% stepped up basis on his share, but basically it's going to cost you money in taxes.
Well, he passed away in 1997. My mother transferred the house to us in 2004, so 20 years ago. So we don't get to start in 2004?
No, it's whatever they paid for it. Had it gone through the estate as an inheritance, that would have been a different situation. But
No,
in your
because
situation, is mom in a nursing home, by the way?
Yes.
Yeah, that's the thing. And she wanted to not have the nursing home take the house.
Right.
So 20 years
Well,
ago.
they're not going to take the house, but you're going to pay taxes on it.
Right, you and your sister get to keep the money. You do have to pay taxes, but
Right.
your share and your sister's share will not go to the nursing home.
Right.
Yeah, so the capital gains is going to go back to 1954.
Well, how much are you selling the house for?
180.
And what did mom and dad pay for the house originally?
God knows, or the search and survey knows. Probably about $19,000.
And what do you think they put in improvements in the house?
Well, I know that the lawyer said they have a chart you can use to calculate estimated reasonable things based on the value of the house. I know they added a full bathroom 30 years ago that back then cost 25 grand.
Well, let's just say that they have 70 original cost basis plus improvements is 75. So then the expense of sale, whatever that might be, maybe it brings it up to 90, and then you sold it for $100 and some $1,000, right? And so the
Right.
difference is going to be taxable to you and taxable to your sister. Of course, mom isn't not going to have to pay taxes on her share.
So her portion will go tax free. That's whatever is left after the sale is about 15% or 18%. I'm not sure. They have a chart for that.
Right. Yeah. Mom's part will be tax free. You and your sister's capital gains part will be at 15% on the federal, and let's not forget New York
New
State.
York State.
Oh, this is going to kill us.
About 22%.
But here's the way that I would look at it. If you didn't put it in a life estate, then mom would have liquidated the asset value as she was in the nursing home because she was obviously on Medicaid, and so you would have had nothing. So it's
She's
not.
on Medicaid yet.
It's what you have left after you pay the taxes, really.
Yeah,
Do-
that's
do-
what I was afraid of.
Do you get that New York State credit for private pay for nursing home?
Well, it's assisted living at this point, so we don't get that credit.
Yeah.
Nope.
I looked into that the last time I called you.
Yeah.
And it's assisted living, and they
That's
don't
why.
have that.
Has to be total.
Right.
Right.
We're doing like her income, plus we're chipping in and paying the rest.
Right. But the best way to look at it is if she would have just twiddled away every month at the asset value, there wouldn't have been anything left and you wouldn't have inherited anything. So 15% is a small price to pay for having asset value of her house.
Yeah, well, that's what she was trying to do. But I think, who was it? Walter Cronkite said, if I knew I was going to live this long, I wouldn't have retired.
Well, that's good. I like that.
Yeah.
That's good.
She's 95 now, so.
Oh, my God. Isn't that wonderful?
Yeah. Well, I'll pass that on to my sister, and we'll do the best we can. I
All
know
right,
they have
that's
a
good.
chart.
If you need help, you know where we are.
Oh, the question was, when is that money due?
Oh,
That's-
next tax
brought
year,
this up.
when in 2020. If you sell it in 2025, it's due in 2020.
Right. You can
estimates.
You can do the estimates. If you know it's selling, you could once it's sold, you can then prepay it. And the 2210, you could say when the income was made. That's a really funky calculation on the 2210, but you can allocate saying the income was made in the second quarter, so here's the money, because it does ask you what was the income in the first quarter, what was the income from the day one through the end of the second quarter, and so on and so forth. So yeah, you could prepay it
Yeah, we
right.
probably won't get money till the third quarter, but will they penalize us if we don't pay that full amount?
And again, there's another exception to penalty. If you paid in 100% of the
100%.
previous year's liability, there's an exception to penalty. So make sure you have on your own return. Let's say your tax liability was $10,000. Make sure you have that 10 in, because the rest of it then would qualify for an exclusion.
There you go.
Because it's a major change in life. We're just taking a guess at it, I guess.
Well, come on in and we'll help you.
I might. I was just in there with Dana doing both mom's taxes and our taxes. So
Dana's
Maybe
Well,
I'll
hey,
come in off
we'd love to help you.
once I find out, it won't transpire till June though. So it'll actually technically be in, I guess, the third quarter. I
But
don't know.
again, let's say that like I said, your tax liability in 2024 was 10,000, and you've paid in 10,000. You don't have a problem because you can pay 15,000, and the 5,000 is under this exception to penalty rule. So check with Dana; she knows what she's talking about.
Oh yeah. Okay. Well,
Thank
sorry
you.
it took so long here.
Oh, don't
You're
be
good.
sorry.
Enjoy the summer. We'll talk to you later.
Okay.
All right, I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and you can text us at 8030930. We have some texts coming in here.
Yeah,
right?
the first text says, I will be retiring at 55 with a New York State pension. Can I defer any amount of my New York State pension into a pre-tax IRA? While I'm employed, I will be growing my business, so I don't need the pension now.
Well, since it's a New York State pension,
Tax-free.
well, it's tax-free on New York. On
New
the
York.
federal, it's going to be taxable, and that is not a 401k, so no, you cannot roll that over into an IRA.
No.
So unfortunately, you do got to take it and pay the tax on the federal
Well,
now.
but I mean, do you have to start taking your pension?
It's a good call. I don't know.
I mean, if he doesn't have to take his pension, he doesn't need the money. Why would he start it? If he doesn't need to.
Yeah, I don't know the New York State retirement system
That's
like
true,
that
but-
part. So
Yeah, and actually, you'll say to them, to the client, so how much you're going to get in your pension? They say, I don't know how much. nobody's computed it yet.
Yeah.
yeah, I
All right,
heard.
now we got another text here.
Yeah.
Oh, it's got to be fast. Deb.
Father died in 2019, inherited an IRA about 30K. I'm 65 years old. Do I have to have yearly RMDs and liquidate it within 10 years?
Well, you have to liquidate it within 10 years, and and the RMD is not required till you're 73, but you have to take it out over a 10-year period.
Right, because this is an inherited one.
Right.
Yes.
So over
So,
10
okay,
years.
I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And our text line is 716-8030930. I'm going to talk to you on the other side about 7 tax loopholes that rich people do to pay less taxes.
Really?
And that means that you can do some of these things too. See you on the other side. Hey, to us, I mean, we care about you, and I think that you can see that. And one of the most expensive things you can pay for is your income taxes, and we want to make sure that you pre-plan your taxes as best as you can to reduce your liability, and EG Tax is there. And if you have questions, you can go to our website at egtax.com, ask the tax lady, put your information in. I will text you back. You can call our office. We have human beings, not just AI. We have human beings that will answer your questions to help you. Okay, let's go back to the phones, Tiff and Chris, we're going to talk to Mark. Hey, Mark.
Hi, how are you, Esther?
I'm marvelous.
The reason I'm calling is I was listening to your last conversation about the stepped-up basis on the inheritance.
Uh-huh.
And I've been the executor of an estate, my girlfriend, and the estate's been open for 11 years, okay? And we've had the house, and we just sold it. And I'm going back to whenever. How am I going to be taxed on that?
Well, she inherited the house, right?
Or you inherited the house? Or
No, what
Somebody
happened is
inherited the house.
her mother owned the house, and then she got it on a life estate. And then she died 11 years ago and left the house to her children, her 3 children. The house has been been available for 11 years.
Well, who lived in the house after Mom passed away?
Her daughter, her son, was just they were coming and going.
Okay, but you see, the stepped-up basis is going to go all the way back to the fair market value at the date of Mom's death, okay?
Okay.
But what's interesting is that if somebody sold the house that lived there 2 out of the last 5 years, they'd have an exclusion on the gain up to 250 if they're single, 500 if they're filing a joint return. So she didn't live there, right?
No, she passed away.
Your fiance, the girlfriend?
The girlfriend passed away, but the children have inherited the house. I've been
Okay,
keeping
well,
it going.
okay, let's go. So, Grandma died.
No.
Yes.
yeah, Grandma died.
Grandma died. Then your
and the
girlfriend
mother-
inherited the house,
from her mother. Yes,
and
through
then the girlfriend died.
And then the girlfriend died 11 years ago. Yes.
Okay.
In her will, did it
and
say?
what's happened in the 11 years?
In the 11 years as the executor, I've been paying the taxes. All the taxes are paid up. All the bills are paid up. Everything is current. And the kids have lived there. You know, one would come, one would go, two would be there. So it's the only ones that have been in that house are the children.
Okay. All right. So it's going to go back to the fair market value on the date of her death. Would be your
Okay.
stepped-up basis. Plus improvements that you made. Did you rent it out?
No.
No rent. So it was all
It's
personal.
never been rented.
So basically, it's the stepped-up basis plus improvements plus expensive sale, and that's it. From what you're selling it for, it's going to be the gain or loss
And the kids will pay. Her kids will pay the tax on that.
because it's her
Right,
kids that.
it's
Did she leave you as the beneficiary or her children?
She left her 3 children as the beneficiaries
Okay.
and me as the executor.
Yep, Chris is correct.
Sounds like you've done a great job,
Yep.
Mark.
Yeah, I'm just worried about how much of a tax hit she's going to take.
Well, I mean, how much you think you're going to sell it for?
175.
Okay, what do you think it was worth when she passed?
Maybe 100.
And what did you put any improvements into it?
Not
After
really,
you-
no.
All right, so you got a 70, and you're going to use a realtor?
No, a private investor bought it.
Okay, so
Split
with
among
the
three.
$75,000 gain, you're talking
25,000
Right.
apiece that they'll have to pay tax on.
right, but at their tax rate. So it could be as low as $2,500 each one might pay in taxes.
Each one might
Or
have to
zero.
pay about.
It'd be very inexpensive. On the federal, the state is going to doesn't have any special treatment, but on the federal, they won't have to pay much at all.
No, but you're saying they're going to each one's going to have to pay about $2,500.
Yeah, but that's cheap, don't you think?
2, 4, 6.
If I will,
They
I
could
will
put-
get 75,000 and pay 2,500 any day.
They
of the
could
week.
put money into an IRA if they have wages. That'll lower the burden a little bit.
Right.
Put money into a
They're
tradition.
now they have very low wages.
Oh, so they're going
Well,
to
then
pay.
they might play 0%.
0%.
Right, Chris?
Yeah, yeah. If they're in the
15%.
12% bracket or lower, then they pay no federal
are.
capital gains. So they're going to
are.
pay nothing to the federal. They're only going to end up paying maybe 7% at the most to New York State.
They're not. They're going to be fine.
Oh, that's much
There's
better
a
then.
favorable
Yeah.
tax rate for the federal.
The capital gains are very favorably treated by the federal government.
Well, once again, Esther Gulius, thank you very much.
Oh, you're very welcome.
So
If the
sorry.
kids need to come in,
Reminded
just
you.
kind of have a group meeting and we'll help them through.
Sorry about the
Okay.
losses.
Well, that was 11 years ago. Yeah, we appreciate that very much. Thank
right.
you.
Thank you. All right. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. What do we have?
We got
cooking here?
David from Amherst.
Hey, Dave.
Hey guys, how you doing? Big fan, long time listener here.
Thank you.
Quick
Thank
question. Two quick questions. The gentleman who just called, are capital gains taxes state and federal?
Yes.
Well,
No.
Okay, so capital gains are federal. The state of New York, even though
ordinary.
it's called a capital gain, it all gets kind of pushed into the regular New York state income tax.
Okay, I'll try to give you a 30-second synopsis here, and maybe you can answer one question. Parents owned a house for 50 years. Dad went into a nursing home for a couple years. In 2023, the house was placed in a life estate. He passed away last year in May. We've had the house up for sale, and it's being sold in about 2 weeks. We know we're going to need an accountant. There's some stuff we need done for a CPA. But the question is this. As it was in a life estate for my mom, myself, and my brother, who lives in Germany, we've been told that his portion of the capital gains taxes has to be paid up front at the time of closing.
That's
And
for New
my-
York State.
Yeah,
For New York
because-
State, right.
Because New York wants
My
to make
qu-
sure you don't run away.
Yes, I'm sure they do. My question is this. For ease of convenience, when we have the CPA do the calculation for my brother's share, can we and myself and my mother have them calculate our share and just pay it up front too? Will they accept it, or do we have to wait till the next tax year?
Well, you can do an estimated payment like we talked about earlier in the show and prepay for the federal and the state. Mom stayed in the house?
Mom stayed in the house. She moved out before it sold, but she did live there for several months, 6 months after my dad passed, and then we put it on the market. She lived there while it was for sale, and once it sold, we moved her into a senior patio.
Okay, so Mom will pay no tax. It will be just you and your brother who will have to pay tax to the federal and New York State. So,
And when it was placed in a life estate in 2023, are we looking at taxing from the $20,000 back in 1972 to the $270 it sold for, or are we looking from the day of the life estate forward?
you're going from the day they bought the house.
Right, the original
boy.
cost basis.
Yeah.
See,
So
what
that'll be it.
if she had, and it sounds so callous to say it like this, but had Mom passed away, then you would have gotten a stepped-up basis. But when you sell the asset prior to the death of the donor, then it goes back to the donor's original cost basis.
Gotcha. Yeah, and that's what we thought. Great. Well, thank you so much for your help. I really appreciate it.
Thanks. All right, Dave. All right, we're going to go to Brittany.
Yep.
Hey, Brittany, how can we help you?
Good. Okay, I know this is probably off topic, but I listen to you every Saturday afternoon. I am 33 years old, and I have a good amount of money, like just in a bank account right now, not doing anything. I also have an IRA, a 401k, and then I also do some stocks on the side. What else do you prefer that I should do?
What a smart
Well, she's an
33-year-old.
old soul.
All right, you own a home?
Not yet.
So
trying to look
I
around,
would
but it's expensive.
definitely look at purchasing a home, because rather than piling up rent receipts, you can pile up an asset, which is going to be up to $500,000 tax-free when you sell it if you get married. If you stay single, the first $250,000 is tax-free. So I would suggest you do that. How's your debt load?
It's halfway decent.
Do you
I only own,
have
like-
credit? Do you have credit cards?
Yeah. And my
Have you
credit
con-
card's like in the 700s.
Very good.
And I
Meaning
just
your
have
credit,
a
your credit
loan.
score. But are you able to pay off your debt, your credit score?
Your credit,
credit
cards.
cards.
Yes.
Good.
I would get rid of the debt, and I would
Okay.
start just putting as much money as possible into my pension plan. I would buy a house and do the pension plan, and then start investing in other things.
Okay, yeah. I do some like little stocks on the side, like about a couple thousand on the side just for shits and giggles to see how good I'm doing.
One of my clients does that. She buys things. She told me, buy things you like. And so she'll buy like whatever she likes. You know, if she likes Windex, she'll buy Windex stocks or whatever company that is. But
Right,
yeah,
but here's the thing: if you're doing things on the side, that's still taxable income. You have to understand.
Yes,
So
absolutely.
Okay, great.
Okay, well, thank you
All
for the
right.
information. I like
Thank
listening
you.
to you every
Thanks,
Oh,
Brittany.
we-
Good luck.
she's
All
cut
right.
from
Thank you.
she's cut from the cloth of Esther. That is so beautiful. She, you give great advice.
Well, I just think you should live below your means
yeah,
and do something.
it's so
The most important thing is you can listen all day long, but if you don't
Action.
do anything with what you hear, what difference does it make?
Right. And actually, buying the house now, because rent, oh my gosh, rent is almost a
oh my
mortgage
God, that's
payment
what people
now.
telling me repeatedly.
It's like what they say a 2-bedroom is $2,000 to $2,400 a month.
Renters are telling me it's shameful what landlords are doing. That's what they're telling me.
So,
But you have to think about this though. Tiff.
Yeah.
A landlord has to pay so much more for that house than
Correct.
maybe 10 years ago. And so their commitment to the bank is with the property taxes, and let's face it, property taxes aren't cheap, and the insurance and the upkeep, they're in business to make money.
They most definitely are. But if you can, I think you gave her sound advice.
Well, I just think you ought to do something.
Action is what you always say.
Right. Well, if you continue to do what you're doing, you're going to continue to get what you got.
Correct.
Right. All right, I'm Esther Goliath, the tax lady from EG Tax. 8030930, 8030930, star 930 on a cell phone. We're going to take a short break. We'll be back on the other side with your questions. Hey, everybody, this is the tax lady, and this is, we're talking taxes. I'm going to tell you something. Tax season is never over. They make you file by the 15th of April, but let's face it, we're all thinking about, if I do this, can I do that? If I do that, because life goes on, and everything that life brings into your checkbook is potentially taxable, and that's part of what we want to help you with.
Well, let's face it,
right?
people in Florida have an extra month this year, so people over there.
Because of the darn hurricane.
Yeah, they deserve that extra month.
Well, actually, it's 15 days.
Right.
May the 1st, right?
Correct.
Yep. All right, I'm Esther Goliath, the tax lady from EG Tax. Scott's been waiting and waiting. Hi, Scott.
Scott?
How you doing?
Good.
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 I just have a question that's funny. I just turned on the radio and I was listening to some of the other people calling in, and I was just talking to my brother about this. What we have is my mother is in her 80s, and she lives by herself and in her house, and she's doing great right now. Now, years ago, she had signed over her house to my brother and I, and so our names are actually as owners of the house, and she just lives there and pays all the utilities and upkeep, taxes, whatever. The question is as far as the, whenever something does happen to her, the capital gains tax, how does the capital gains tax work whenever the house is sold eventually?
Is the house, did she turn it over as a gift or a life estate?
It was that's a good question. I believe it was a gift because it was like 10 years ago.
See, so then that's not, okay, so you have to look at this thing. If your mom goes into a nursing home at $14,000 a month, if she didn't do something with the asset value on that house, there was going to be nothing left. So that's the positive thing. But had she done a life estate, what happens is over the 5-year period where it's incrementally being gifted to you guys, and upon her death, there would have been a stepped-up basis on the house, and which means you guys wouldn't have paid taxes. Since she put your name on the title 10 years ago, that means she gifted you the house. So her original basis and Dad's original basis, plus improvements, plus expensive sale, is going to be what you're figuring your gain on, and you will end up paying taxes.
Okay, now, I'm not, this happened so long ago, I don't remember the specifics. We had an attorney do it, but there was also a trust that was created the same year, and I don't know if the house was part of the trust.
Well, that's why you got to call on Monday morning, call the attorney and say, just exactly what did you do for us? Because this could been absolutely fine.
Do you know? Are the property taxes still in Mom's name, or are they in yours and your brother's name?
So that's an interesting one. My mom just told me that on the tax bill that she gets, her name is on it and my name is on it, but not my other brother's. Only because she called in to ask, and they said we can only put 2 names on a tax bill.
Okay, but it sounds like probably she just gifted it to you. But there's still time to change that. She could put the title back in her name and then do a life estate.
Okay.
So, but the thing is, it's really good that you found out now because Mom's on this side of eternity and things can be done.
Yeah, things are great. But she's always trying to plan for the future. The other thing is, I know you're saying the nursing homes are expensive now. Assisted cares are not cheap either. Everything goes up.
That's true.
But so what she was doing was she got some advice, and I don't know if this is right or wrong, but So she's like, well, if I have to go into a nursing home, I want to be able to pick which one I go into. I don't want to be told I have to go into a certain one. So she was told that she should keep somewhere between like 80 and 100,000 in her account in case that day ever comes.
Because
So she
she
more
has to be
attractive.
she should be private pay for some time in order to pick the nursing home that she wants to go to before she goes on to
correct.
Medicaid.
She's correct in
That's
what you're
correct.
saying.
Right.
Yep. But I would
she's
call
doing
the
that.
attorney and find out exactly what he did for you.
Yeah, I was just wondering what the ramifications are for capital gains are. Whenever that day comes.
It depends if she gifted it to you or if she put it in a life estate.
So how much you think the house is worth?
Her house,
Yeah.
I don't know, 275, 300.
Okay, so, and what do you think Mom paid for it?
What did she? I know exactly how much she. In 1991, she paid 92,000 for it.
So if you end up with a $200,000 gain, you and your brother could potentially pay about $50,000 in taxes.
Split between the two
But
of you.
yeah, I would say definitely, Scott, when you find out from the lawyer, give our office a call,
And we'll
and
help
we
you.
can we can give you exactly what's going to happen.
All right. Thank you for your advice. I appreciate it.
All right.
Good to
our
be a
pleasure.
good planner like your mom.
All right. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. What do we got here?
There's a text that says, EG Tax, best tax show ever. Great tax advice. Thank you. God
thank you.
bless.
That's
And then the next one is Betty from Niagara County. She's got
Hi,
a
Betty.
question.
How can we help you?
Oh, we went to Bill. Sorry. We
Oh,
got Bill.
Okay. Hey, Bill.
Hey, quick question. I called earlier, maybe a month or so ago. My wife passed in February, and neither of us worked last year. We're both on social or were, and there was no income there. And they said that whoever spoke with briefly said there was no need to file a tax return.
Right.
Is that right?
There's a minimum filing requirement. Neither of you had wages, correct?
Correct.
And the New York IT 229 is kaput. So yeah, there's no need. to file.
No pensions, no stocks, no interest.
Nope.
Yep.
Nope, you don't
I
have
wish.
to file.
Yeah. No, we had a financial difficulty back at the lie that they told everybody back in 2008-9. We lost everything in Florida. But that's all right. We did well and came back and rebuilt the greatest country in the world. And God bless you guys for what you do.
Amen.
All right, well, thank you for listening.
Thank you. Appreciate
I'm
it.
Esther Gilius, the tax lady from EG Tax, 8030930, 8030930.
2008 was about the year of the housing bubble,
Yep.
The mortgage.
We have Betty?
Now we got Betty.
Hey, Betty.
Hi.
Hi.
Hi. Can you hear me?
I can hear you.
Hi. I have a question about tax exempt.
Sure.
I work at a small business, and when we do their credit cards, like for the customer, it'll come up, are they tax exempt? And when you try to hit no, the manager tells me, no, you got to just push through with the green saying yes. And I find that I don't understand that. Is that something with the taxes, or don't you have
That's
to
the
have a
sales tax.
Yeah, it's for a 501c3, which is a tax exempt organization.
No, I think it's more like sales tax.
Right. Well, that's what it is. They're asking, are you a 501c3,
Right.
basically, so you don't pay sales tax.
Right.
So, yeah, it doesn't matter if you say yes or no on the credit card terminal, because unless it's a point of sale terminal, like, an automatic. But if it's just a regular credit card terminal, it doesn't matter if you say yes or no.
You're asking a really good question. It's important to learn the logistics behind it, and so that's the logic behind it.
Right. And when you say point of sale, what does that mean?
It's like when you go to a restaurant and they enter your drink and your food order there, and then that would charge sales tax because it's a restaurant. A haircut place would charge sales tax because it's a haircut place. So what type of business do you do?
It's sales like in construction.
Then do you only deal with contractors or the general public?
We deal with both. And the contractors, they get billed differently. It's just the people that come to the counter when they purchase something when we use their credit
Well, then
card.
they should not, unless it's a capital improvement, they should not be tax exempt.
And so you should push
Right.
through like you're.
You should say no then, that they're not
Right.
tax exempt.
Right. Well, the establishment's telling me as an employee that I have to push it through because I'll do it. I'll put no, and then I have to put in the tax amount. And when I do, it kind of like cuts it off and the sale doesn't go through. So then they tell
Well,
me
I'm
no.
going to tell
don't
you something. With New York State, you want to make sure that you're doing your sales tax correctly. So I would make sure that on Monday I would verify with my boss to make sure that you know what you're doing, because if they aren't doing their sales tax correctly on New York State, they could have hell to pay, quite frankly.
Well, that's what I was thinking, and I'm
I
like,
know.
well, who gets held responsible for
Right,
that? Is that
right.
that me?
No, that would be them.
They would be held responsible.
Okay.
You know, and sometimes your boss will say things off the top of their head, not thinking. But I'm going to tell you, I would say to them, you know, really, if somebody's buying a screen for $25, they got to pay sales tax on it. You don't push that through.
Right. That's what I was thinking. That's why I keep saying no, and the manager.
That's
was
because
like,
you're
"No,
a good woman.
Yes. Well, thank you.
Okay.
Yeah. So I just wanted to confirm on that.
No,
'cause I'm
you're
like,
right.
No, this
You're
can't
right.
be- this
You want to
can't
make
be right.
sure that you point that out to your boss, because if there's a New York State sales tax audit, you would rather have gone to the proctologist.
Right.
Okay,
Right.
you want to grab Bert before the show's over?
I don't think we have time.
Wait, Bert can't find his tax return. If you need help, call our office. We can get a transcript
get a
for you.
transcript for you.
Call 632-7886, and we can go on the IRS portal, and they can put it into our account.
Anyway, I'm Esther Golias, the tax lady, still alive after tax season. Want to make sure we get you guys up and running for next year. It can be complicated, and the thing is, whether you do yes or no or right or wrong, left or right, those can make thousands of dollars of difference in your tax situation. So EG Tax is there to help you. Until next week, I'm Esther Golias, the tax lady, Tiffany Fabian, Christopher Fabian. Thanks for listening. Go to egtax.com.